having a factory with no customers is a nightmare. So as you think you are ready in terms of technology readiness level to move to the industrial scale, you need to structure your commercial development. To make cement, it takes 3.5% of worldwide emissions. If you look at energy as a whole, it's 75% of worldwide emissions. People complain about regulations, but regulations provide a kind of framework, a clear structure, and it is a way for investors and for companies to understand what are the rules. I think there is a funding gap, and I think actually the funding gap is bigger than I expected.
For people that don't know you, you spent about 15 years working in the automotive industry. So you were a corporate guy before.
Yeah.
You're now the partner at Axeleo Capital on the Green Industry Fund. Few things I'd like to chat about. First is to understand why software alone will not move the needle enough for climate change. Want to talk about what makes an investment in an industrial startup a bit different. Some of the basics are still the same, but there are some differences. Want to talk about how to de-risk capital when you do that. And then also, I think I want to talk about Europe. I think industrialization and Europe are quite linked. So also want to talk about that. That sounds like a good agenda.
Excellent. Thank you very much.
Before we start, two things I should say. So listeners, don't forget to subscribe on YouTube or to follow on Apple Podcasts and Spotify. That takes 2 seconds, but really help the show. Second thing, thank you to Cambridge Consultant, a part of Capgemini, and Climate Tech Supercluster for supporting this mini-series. When we think about industrialization, why does it matter for climate and why does it matter for Europe?
Let's start with climate. Of course, you can optimize a lot with software, and we have seen a lot of interesting startups bringing some ways to optimize our energy consumption, for instance. But at one point, if you really want to move the needle in terms of tackling what remains as emissions or what remains as pollution, because it's not only about climate, it's about environment, you need to change the way we make things. You need to change the way we produce energy. You need to change the way we produce chemical products. So to do that, you need to invest in hardware and you need to change the industrial processes. For instance, our first investment with the Green Tech Industry Fund is in Sweet Energy. It's a renewable energy producer. To make the energy, they make machines. So it's an industrial process. Some of industries are direct emitters, like cement. It's 3.5% of worldwide emissions. But if you want also to change, for instance, the way chemicals products are made, you need to change industrial processes. You need to create new products or to create new industrial processes. And that's why investing in hardware is absolutely necessary to tackle the environmental challenge we face.
Do you have any statistics? I remember we talked about that earlier in terms of like CO2 emissions, software, industry.
As I said, you have some industrial sectors that are direct emitters. So to make cement, it takes 3.5% of worldwide emissions. If you look at energy as a whole, it's 75% of worldwide emissions. But what for is energy used? It's used for industrial heat, it's used for industrial processes. So to reduce the emissions from the energy productions, at some point you need also to change the industrial processes and to change the way we make things in the world.
The world is very much still something physical, right? So we still produce a lot of real outputs, not digital outputs. When we go back to setting the context for that conversation, there's something else that I want to talk about, which is Europe.
Yeah.
Industrialization is more and more on the political agenda, not only on the climate agenda. Why is that the case?
I think there are two key drivers. First of all, I think that after a long period of losing the meaning of why is it important to have industrial jobs, I think that European societies are going back to recognizing that industrial jobs are really important jobs. If you look at France, for instance, there is a very good book written by a sociologist that shows that when a factory closes in a town, it has a direct impact on the jobs of the factory, but it has also a broader impact on the town. And industrial jobs are quality jobs, well-paid jobs, jobs that bring other jobs around the factories. So it's really important for Europe to keep some industry. And you have two ways to look at it. You can try to keep what you've got, but you also can try to innovate and to find new industries, new products, new technologies that will help you to keep this industrial backbone that is absolutely necessary as a society. If you look, the second driver is a geopolitical one. We are not anymore in a kind of unified world. We have different regions having their own agenda, their own political agenda, their own economical dynamics, and we need to find our way. We need in Europe to find our way and to define what's good for us, to cooperate, of course, with other regions. We need to cooperate with China, we need to cooperate with the US, but we need to have our own agenda and to fight for having our own industry, our own resilience in terms of supply chains and in terms of value chains.
Yeah, we've seen it during the COVID crisis. If the borders of countries are locking down, then there's lots of problems happening, right?
Yeah, and it is something we are really keen with the Green Tech Industry Fund, which is at looking at startups that can localize their supply chain locally, not only for the sake of having jobs in Europe, which is very important, but it's also because it's a resilience factor. You control better, you have a better relationship with your suppliers, and you have, at the end of the day, a more resilient company, so a more sustainable investment.
It's super interesting because industrial green tech is like it's at the intersection of so many topics. So many people are concerned about it. As you said, like we have employment is a key concern, climate is a key concern, the political aspect is a key concern, supply chain risk is a key concern. Like so many people need to work towards that. But look, if I think about Europe, are we well positioned to be able to reindustrialize? Like, do we have the talent? Do we have the willingness from corporates to buy from the new startups? Like, what's the status of Europe right now?
Uh, First of all, we have to be lucid. We are in danger, and some value chains or some industrial sectors are under huge pressure. So we need to be lucid and to know where we need to fight, where we need to protect our industry, and where we need to cooperate with other regions because they have gained this strategic advantage on some value chains. And the best way for us to foster and to develop is to cooperate with them. That being said, there is a huge sum of talents in Europe. If you look at innovation, for instance, if you look at quality of universities, quality of schools, number of people going out from these schools to create some startups, to innovate in different fields, it's absolutely huge, not only in big countries, but in a lot of different countries in Europe. So you have really a broad network of innovative centers in Europe. When we launched the fund, we were a little bit worried about are we sure that there are enough startups, industrial startups, at the right stage of development for us to invest in. And actually, we have 2,500 companies in our deal flow.
In industrial green tech?
Yes, coming from all different European countries, because we have this backbone of universities, schools, quality of research, quality of financing. We have a lot of public financing in Europe that helps the initial stages. So you need some private money to develop the company, but we have these public finances. We have also another asset, I think, in Europe, and it's sometimes a kind of underestimated asset. People complain about regulations, but regulations provide a kind of a framework, a clear structure, and it is a kind of a way for investors and for companies to understand what's the playing ground and what are the rules. So the fact that we have in Europe a kind of stable, clear regulatory framework is very important, and I think it's also an asset for Europe compared to other regions.
Yeah, it's funny going back to what you were saying on the public financing. I had this conversation with Johnny from Marble and Yair from Extension, and they were saying they were at New York Climate Week, and some guy was giving a conference about how to get public financing from Europe while staying in the US, or like just opening some sort of a post box somewhere in Europe just to get the grants. I was like, crazy. Hopefully, we don't go that route. But
to jump on your point, we see some American startups coming in Europe not only because it's a huge market, but because it's a kind of clear market where the rules are clear, where the, let's say, global direction is clear as well, and where you have a kind of a regulatory framework that is, let's say, safe for companies to strive and for investors to invest. We see also some American funds coming to Europe. I was at the Drop in Sweden this year, a great event organized by our friends from PL Blulat, and my surprise was to see some American funds over there. So not only European VCs, not only European startups, but also some LPs and some American funds coming to Europe as well.
Look, you've got 2,500 companies coming to you for industrial green tech. First of all, that is surprising and also gives me hope, because that means a lot of people are working on the topic, but I would have imagined that it would have been much smaller. Do you think that is because you are clearly identified as a VC that is willing to invest in industrial clean tech, which is not the case for everyone, right?
I think so. I think also that it is because we have a very, let's say, a dynamic and vibrant environment in terms of ecosystem of funds investing before us, investing at the seed stage. We invest later. We invest in Series A, where the company needs to go to the first of a kind, the first factory, the industrial scale of their operations. We will talk to that later. And I think we have this kind of ecosystem of funds, of universities, incubators, accelerators, and all these people start to know us. And I hope more of them will know us thanks to you as well. Yes, it's a kind of natural deal flow coming to us. And we also are working a little bit to spot the right ones. Yeah.
Just want to say, if people want to reach out to Marc, I'm more than happy to do an introduction if needed. Look, if we think about the state of industrial innovation, I think the common saying for most VCs is industrial innovation is too hard. It is too difficult to finance, too capital intensive. I don't like it. It's not the SaaS J-curve where I'm going to make tons of money. Is that accurate? Is that an accurate statement?
Not really. There is something true in it, which is, first of all, there has been a lot of successes in software deals. I think that what was easy in software has already been done. So now it will be a little bit more difficult to succeed in the software. But to come back to hardware and to come back to industrial startups, of course, there is a risk. There is also a risk when you invest in a software company. I mean, if the CEO and the CTO don't get along after a few months, you're dead. So basically, it's not the same risk. And of course, because you have this industrial asset to finance, it's a bigger risk. It's not the same. It's not a higher risk. It's a different risk that you need to assess with different skills, that you need to look at specifically at some areas. We will develop on that maybe, but you need some specific skills to invest in industrial startups, and that's why we launched a fund. And that's why we launched a fund with a guy like me. I'm not a VC expert. I'm not let's say a veteran from the VC industry, but I am a veteran from the industry. I've seen a lot of industrial processes. I've seen a lot of capex expenditure. I've seen a lot of factories, and I think it is important when you invest in industry to know about industry.
And also going back to the SaaS and kind of software play, I think there's also this thing with AI right now that it's easier than ever before to create software. So I don't know if it's still
there are some risk as well,
right? Yeah. Which is also interesting because you guys at Axeleo you have different strategies. I'd be curious to sit down with you in 10 years and look at the return from each strategy. But my bet is you're going to do better, I hope. So as I said, a lot of VCs are now willing to invest in industrial climate tech. Do you think there is a funding gap today, or do you actually are you seeing companies being able to raise money?
I think there is a funding gap, and I think actually the funding gap is bigger than I expected when I launched the fund. I thought that there was a funding gap on the financing of the first factory, the first industrial operations, and there is one, definitely. It's difficult for a company to, let's say, move from the pilot to the first of a kind, or for the demo, or for the first factory, and to raise money at that stage, because they need to have a certain degree of maturity in terms of industrial, let's say, capacity, but also in terms of commercial development, in terms of maturity of the company. So it's a difficult step.
And is that supposed to be VC money?
Not only. It's a very good point. I will come back to that. But actually, what I think is the funding gap is a little bit larger, because what I see is a lot of companies also having difficulties to finance their pilot. having difficulties to finance a little bit the earlier stage, just because the seed money has been used to develop the technology. The market is a little bit more difficult. Cooperation with corporates is a little bit more difficult, and I think it's a very important point for an industrial startup to be able to cooperate with the big corporates. So the Death Valley is a little bit bigger than I thought initially. So definitely you need some VC money at some point, because you need some private equity money to develop the company. But you need, and it's something we can help the companies as well to do, to mix different financing tools. To invest in industry, you need equity, you need debt, and you need also to leverage this public financing we were talking about earlier in terms of grants from the country, from the EU. So you need to have the right mix, and you need to understand also what exactly you need to finance. One of the key topics we are looking at when we are qualifying a startup or looking at an industrial project is the right sizing of the investments. You don't need to build a cathedral at the first time. So you can have a modular approach. So right sizing the investment, invest at the right stage, looking at what do you really need to make and what you can buy. Can you outsource part of your process? What do you want to control directly? All these questions are very important, and the funders of the industrial startups needs to tackle this type of issues.
Talking about the funding gap, is it competitive for you today to get into deal, or do you have an easy life because there's a funding gap and so you're alone on the cap table?
No, I won't say I have an easy life, because finding the right industrial projects, industrial startups that will succeed is always a difficult job, as it is a difficult job to find the right software startup as well. So I would say that it leads us to be quite in a kind of competition, but also cooperation with other funds. When we invest in Series A, quite often we are not alone in investing. So we try to bring around the table the right investors for the company with a good complementarity, a good mix of investors. For instance, we recently invested in a German company, BioVeg. As a French VC, I was really keen on having German partners as well around the table. So we have a German bank, which is very good for this mix of financing tools that I was mentioning. We have also a German VC fund focused on impact, which is also very good because we are several investors having this kind of impact view on impact DNA in the way we invest. So we need partners. So we need a competition, and we need cooperation.
Yeah, that's always a weird thing in VC. One day you can be a partner, the other day you can be a competitor.
Exactly, yeah.
But no, super interesting. Look, the big thing today I wanted to talk about is how to invest in industrial innovation. All right, let's talk about the basics first. What are the basics that you look for in a company that is doing industrial innovation?
I mean, the basics are the same as for any investment, any company. The quality of the team, the quality of the technology, the defensibility of the IP, for instance, the reality of a market. Are there some customers somewhere ready to pay for the product, for the technology? These basics are, I think, for all investments. What is specific for industrial startups is to focus on the industrial risk, on the way to assess this risk and to de-risk the company on this industrial investment. So, as I said, the right sizing of the investment is very important. The quality of the project management, the readiness also of the funders to welcome new skills, because quite often we have great funders coming from science, great ladies out of PhDs, out of labs of the great universities we have in Europe. They don't know about industry. Some of them don't know about commercial development. So they need to be ready to structure the team and to take to onboard some new skills, some people with experience. So they need to be ready also to pay them or to give them some shares of the company and to broaden the scope of the team, to structure the team. Not only on the industrial project. So you need someone knowing about industry, but also to structure your commercial development. It's a mistake I see often. Having a factory with no customers is a nightmare. It's the death of the company. So as soon as you want, as you think you are ready in terms of technology readiness level to move to the industrial scale, you need to structure your commercial development. What is the market? How do you segment it? How do you address it? What are the first partnerships? Do you have some silver bullets with some key partners? What is the commercial team? How will they work? All this is very important and needs to be addressed in the same time as preparing the industrial investment. So there is a kind of technology maturity. There's also a kind of industrial maturity that where you need to progress in the same time, and there is also a kind of commercial maturity where you need to progress as well in the same at the same time.
So it's funny because it's nothing major of a difference there. I mean, talking about commercial
Yeah,
viability.
you're right, and it is something we are very keen in our software strategy as well
Exactly.
to assess commercial ability. What is specific is industrial project. So you need to really understand the capex financing. You need to understand what exactly do you need in terms of investment, what exactly do you need in terms of equipment, and something that is also very specific to industry, and that I was about to forget. So it's the supply chain. A factory is not a kind of isolated asset. It's kind of it's a chain. It's an ecosystem. So you need to understand what's your suppliers. You need to negotiate with them. You need to be able to negotiate with them. You need to be able to have a kind of depth of suppliers. And you need also, on the other side, to have the customers, to have the logistics to reach the customers. So the supply chain is a very important topic for industrial startups. And again, it is a topic where sometimes the founders need some help or are not enough aware of the criticality of the topic.
And talking about commercial development, I'm curious, what is in practical terms when a company comes to you for Series A investment?
Yeah.
What do they have? Is it a letter of intent? Do they have already revenue? Like, where do they see it?
Yeah, some of them have already revenues because they have some, let's say, co-development contracts, for instance, with some customers. So they may have some small revenues. Usually they have small revenues.
When we say small, below 500K?
Yeah, 500K, 1 million max. So small revenues. We don't need that. What we need is really three things, sorry. First of all, and I should have said that earlier, we need to identify within the founding team, let's say, the real willingness to go on the market. The willingness to bring your innovation on the market and to sell it to customers. Some founders are great scientists, but they're happy with a kind of R&D company and having some development contracts, some research contracts. We want to identify funders that really want to go on the market and to sell their innovation, to sell their product to a broader audience, to a broader market. That's the first thing. The second thing, as I was mentioning, is they need to be aware of the need to structure the commercial development. So either they have already a commercial team, either we agree together that they need to get to structure a commercial team, having some people to sell, having let's say a structured way to approach the market. So selling is not just about talking to people. It's there is a lot of, let's say, analytical work to be done to sell correctly. So they need to have this kind of selling organization either already in place, either we understand that they can do it. And quite often when we discuss with them, it's one of the conditions of our investments. The third one is they need to have the first, let's say, leads in terms of commercial development. So the best case is they have already an offtake agreement. So that's, let's say, that the top quality ones. But we can invest in some companies that don't have really the signed offtake, but then we need a letter of intent is not enough. So we need the right letter of intent, and we need to speak to the customers. So we never invest without speaking to customers or speaking to partners, but because for us it's absolutely key to understand that. And the same way, we never invest without visiting the pilot operations, because it's really important to see how it works.
For sure. Talking about the commercial development, do you always need someone from the industry to be able to sell? I mean, the industry is so specific, right? Like, it doesn't act like a startup at all. It couldn't be more opposed.
I think you need two things. You need people knowing the market. So you need people that can help the startup to, let's say, save time and have access to customers. In industry, quite a lot of customers are big customers. So they are big groups. You need to understand how these groups are working. how do they work? Sorry. You need to understand how to approach them, and you need to understand how to negotiate with them. So that is something we can help the startup with, because we have this experience within the team. But it's also something that the commercial team of the startup needs to have. So you need to bring someone from the market.
Makes a lot of sense. I guess one of the big question I would have if I were to look at a industrial project is, can this scale, right? Because obviously, as you said, you're investing at a point where there is no revenues. So your goal is to really make sure that it grows fast, because otherwise it's a bad investment. How do you assess this question?
Yeah, it's a very difficult one, and I mean, we have to be humble. I'm sure we make mistakes, because it's the life of an investor, and it's life. But I think one of a real important point is really to understand the market, and to understand how the startups will fit in that market. You need to find some startups that will bring something to the value chain, that will bring something to the industrial customers around, because you will not replace Renault, or you will not replace Bayer, you will not replace EDF. So you need to find ways to fit in the value chain, to bring something new, to bring some value to the customers. And that really what we are looking at in terms of commercial development. And you need to have the team to be able to bring that value to customers.
When we think about the team at Axeleo as well, I'm curious, when we think about industrial innovation, do you need to have different type of investors?
We need to have people understanding technology, um, having a kind of taste for innovation, taste for technology, happy to really look into the details of the technology, into the details of the industrialization process. So, for instance, we have hired 2 analysts. They are great guys, and they have, let's say, a double knowledge in terms of engineering and business development or business. You need also to have people having experience of different sectors, because you don't know about all the sectors. So I come from automotive. In automotive, you can see a lot of different things, materials, assembly, a lot of different technologies. But you need some different purposes. So, for instance, we have someone in our team, Sandra Dubos, our investment director. She comes from she's a biochemist by training, so she has more experience in terms of chemistry, in terms of life sciences. So I think it's important to have a kind of mixed team, but with this kind of focus on understanding the technology and understanding how things works. That's why we are always looking to visit the pilot installations, because you can learn a lot, including about the scaling ability, by looking at the way the pilot operations are organized. There is also another point. You have the team, the core team, but you have also the. I think it's also important to have the ability to have access to different experts, because some technologies are very specific. So you need to identify the right expert that can help you to assess the technology, to assess the company, to assess the scaling opportunity, as you were mentioning. So it is also something we are working on, and we have access to a lot of different experts who are different experiences from different sectors, that can help us in assessing the companies, and also help the company to develop after our investment.
Yeah, tell me about osmotic energy. We were chatting about that investment, making electricity from waves. I mean, obviously, it's not an easy one. I'm curious about this one, for example. How did you build conviction in making electricity from wave?
I think the first thing is about the market. It's a huge market. It's a huge opportunity, because osmotic energy, so energy coming from the difference of salinity gradient, because between salted water and still water, it's a renewable energy, but it's a permanent renewable energy. And you just need some salted water and plain water. So you can find that in all estuaries of the world. And 70% of the worldwide population lives in estuaries. So basically, the market is huge. The market opportunity is huge. Then we invested at the stage where the company had already proven its ability to move from the nanometric scale in the lab to, let's say, a first production scale. So, and moving from nanometric scale to centimeters and then to 1 meter is already a huge journey. So we invested at that stage where they have no pilot working, so they produce energy in the Rhône, in Barcarin, in France, and that's the stage where we invest. And we think they can develop in a lot of different regions with a lot of different partners, and that's also something which is very important: the ability to work with partners. And we touched that a little bit earlier, but I think that for industrial startups, having the ability to discuss with bigger partners, you need to discuss with electricity producers, you need to discuss with big industrials that have needs in terms of energy producing, so that can have their own installations in terms of energy producing. So you need to be able to speak with big chemistry players all over the world. So this ability to talk to industrial partners is really something we try to assess and to develop in the companies we invest in.
Yeah. Although, from my perspective, I think the one thing I would have looked at is really just price. It might seem stupid, but like I think
No, it's a very good point. I think, but it's true not only for osmotic energy. It's true for all the technologies and the products we are looking at. The ability to reach a price that is competitive for current players and for, let's say, the industrial value chain that I was mentioning is absolutely key, and it is something we really assess. There is no more any green premium. That's over. So you need to be competitive in price. And the ability to reach the right, let's say, couple between quantity, price, quality is really, it's about industry. It's really what industry is about. It's why we need industry to be able to make a lot of things at the right price for the customers. So it is something we assess, and yes, and there is a risk there. But assessing the ability to scale the operations and to reach the right price for the market is, yes, it's absolutely key for us. You're right.
I guess one last topic for today. You're obviously an impact fund.
Yep.
There are a couple of things that comes to mind, but first is how to make sure that the industrial process that you're investing in is actually positively impactful. The second is there is so much backlash from big corporates that are not trying to reach their goals anymore. How do you manage that today?
Yeah, it's two very good points. First of all, impact is a part of my motivation as an individual, and I think it as a motivation for the company to develop impact investing. So it's really in our DNA. We invest in technologies that bring a positive impact. So of course, making things, developing industrial processes, you have a kind of negative impact. So you need to minimize this negative impact. But also, we are investing in companies that can bring a lot of positive impact because they bring new products or they bring new technology. We spoke about switch energy, so the positive impact is obvious, but I can talk about Axeleo, which is a Swiss company, a water treatment company. They eliminate PFAS from industrial water. So it is an environmental problem that is not tackled today. They have the technology to tackle it, and to tackle it at a reasonable cost. Which is very important. Same for BioVig, a German biochemistry company. They can make bio-ingredients from biocellulose that can replace ingredients where you have microplastics. So basically, they can help the cosmetic industry, for instance, or the personal care industry to eliminate microplastics from their products. And microplastics are everywhere today, in our bodies, in the environment. So we can have a very positive impact by the technology the company we invest in are developing. In terms of the second point, there is a backlash today, that's clear. There is some, let's say, also big corporates waiting a little bit to invest or to help technologies to develop because they wait to know where the regulatory framework will go. They need to see some political incentives. I think that in a lot of industries, impact and economical performance or resilience goes together. If you look at decarbonization for Europe, if you take Europe as a region, we import our fossil energy. So decarbonizing our industrial operations or decarbonizing our usage of different tools is a way to protect the environment, but it's also a way to protect ourselves from geopolitical shocks, and to save money. Simple as that. And I think it's true for a lot of processes. If you look at, I speak regularly with industrialists, with even some owners of, let's say, middle-sized companies in industry. When you look at decarbonizing your operations, you need quite often to look at your processes, to optimize your processes. So you optimize your energy consumption, so you save money through the diminution of the energy consumption, but you optimize also the whole process. So I think it's kind of also a kind of a way to re-optimize the processes and finally to have a better economic performance as well.
Yeah, I mean, you don't have to convince me on that. But no, thank you so much. It was a pleasure to chatting with you today. If people want to reach out, I think LinkedIn is the right place to find you.
Sure.
And then also, I mean, reach out to me. My email is quite public, so if you want an introduction, happy to do it. I guess if people want to talk to Axeleo in general, I put also the link in the description.
Thank you very much.
And then otherwise, listeners, if you like this episode and if you like the show, don't forget to like, comment, subscribe, all of that. It takes 2 seconds, but it really helps. Thank you so much, Marc.
Thank you very much, Hugo.